we've been talking about this meeting. It's come and gone, and it has been quite a stretch, and the result really hasn't been what the markets were really expecting.
No, exactly right, Manisha. Good afternoon from Sydney. You know, I think one word sums it up. And you know what that one word is? Underwhelmed.
Yeah.
And the market, you know, we saw it was smack down at 9% down, 9.5% down. Everyone was expecting, you know, that it'd have a big reversal and it'd be well bid up. It was up about 3.5% to 4% in Asia trade when you guys were just waking this morning. And now it's up around about 1.5%. So it wasn't strong at all. And I feel as though that this could be the I'm not going to say it's going to be in the teens, but I tell you what, it is underwhelmed, and the market's going to really hammer it, I think.
Underwhelming, clearly. And the 9.7 also is only for a couple of months, because from July it gets tapered down further, and that's how it just continues going forward. So what is your sense on what kind of global demand and supply numbers are we working with for the next couple of months? Next couple of months are important because the markets do believe that the coronavirus impact or the lockdowns will actually ease off and we will see the demand come back. What is your own sense for the next 2 months now in sense of prices and then going forward?
Well, another thing on that, as you know, that there was a baseline on October 2018 production numbers. So truly that 9.7 really probably isn't closest to the actual number itself. It's a little bit under that. So, and then as you said, it's 7.7 million barrels a day from the second half of 2020, and then all the way out to April 22 at about 5.8 million barrels. So what's going to happen, I think, is going to be, yes, if the coronavirus is under control within, say, 90 days, then it's going to be a slow grind up from there till the end of 2020 and probably halfway through to 2021 as far as production numbers. But if it takes longer than that, Manisha, then it's going to be a very, very tough time for the crude energy markets. And it just seems to be a very, very soft energy sector at the present. You know, there's nothing there. There was nothing uniform. There were no mandated cuts also from the US, Canada, Norway or Brazil. So that needs to be also considered. In Mexico was a late starter, Manisha. Everyone was saying a pro rata cut of 400,000 barrels, and they've come in at 100,000 with talks that the US might fill the gap and hit another 250,000 to make up for Mexico's numbers. But you know as well as I do, it's not mandated, and they're just saying the production will ebb off. So it's a pretty much when you start to pull it all apart, it's a fractured sort of deal. It hasn't got a lot of legs, and I think it's going to be fairly poor reception to the market.
I like the way you're putting it, Peter. Underwhelming, and it doesn't have any legs. So whatever is done, also we don't know whether on ground, how much of that will we see. So my final question, Peter, is on the prices then, because we're holding around 23 for the US crude, 31 now for the Brent crude oil prices. What is the range that you see crude prices working with now?
I think it's got to be softer from here, Manisha. I went out on a limb and I said it's going to be we'll see a 16 handle eventually over this period. This could be the point of really push it into the teens. I think that the present, it'll range trade, it'll be volatile. You'll see big whipsaws each and every day. But I think it's going to be softer from here leading in because of those numbers for the rest of April and certainly into May. What goes on after that is pure speculation. There's not an analyst or anyone in the world that can tell you what's going to happen on the 1st of June. But over the next 6 weeks, Manisha, I think it's going to be softer from here, and it's a troubling time for producers. Great for consumers, but pretty dire if you're a producer.